The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everyone. It's Brian Caprice from Keep Trading Simple, and welcome to today's Nadex broadcast on current market analysis and identifying potential opportunities. For those of you that joined us earlier today, we have definitely had some movement from our discussion at 9 a.m. If you guys don't know what I'm talking about, every morning on Nadex now on their YouTube page, we are doing about a 10, 15-minute broadcast of kind of some of the hottest opportunities of the morning and potential trade setups. Those are easy to find. Just go to YouTube, type Nadex, and go ahead and click the notification and follow button over there, and you'll get notification when we go live. It's been pretty fun, but definitely some movement today. Lot to cover, so I'm going to dive right in. If you guys are new and aren't sure who I am, you saw me in an email and don't know anything about me. I'm the president and CEO of Keep Trading Simple. So my goal in doing these presentations for Nadex has always been to give their traders or their golden nuggets or a new way to look at things. I've been trading since about 2000, so I've seen tech bubbles, housing bubbles, booms, busts, sideways, up, down, left, right, multiple presidents. Yeah, it's just been a lot of stuff, and I hate to say that it's been 20 years, but wow, it's been 20 years. Started the traditional way. I am not like a 12th generation trader. My dad actually was a programmer, worked for IBM, was a ones and zeros guy. So I was the first one really to kind of dive into trading kind of full time. He was the a little bit more conservative than I was, but we used to like talking of that when he was around. And basically, I learned the traditional way, stocks, options, found Forex, got into futures later on. I was a financial advisor for a short time, realized that it was absolutely nothing like what I expected it to be. I assumed that, hey, financial advisor, they must know all the insides and outs. Got there, they talked nothing of trading. I knew more than 99% of the people in my office. I did learn about bonds, which was a great thing because I hadn't really read much, learned much, traded much on bonds. So it was a way for me to broaden my horizons. But I came out and decided that I wanted to teach. I've created a number of different systems. I will mention some of those today for you guys. Again, I bring them up. There's actually some things that I only talk about. When I say only, I have only talked about them in these presentations with Nadex. So again, you guys are getting kind of a bonus above what even my students are getting. Have traveled around the world, U.S. and Canada. I was supposed to go to Australia, but unfortunately that didn't work out. Talking about trading and teaching people how to trade the market. So again, I'm an open book. Anything you guys want to know, you're more than welcome to ask. One last thing, I am not a big indicator-based trader. I am a price action and supply and demand trader. So you'll notice I'm not using a lot of the secret sauce or the tools that the so-called professionals out there are telling you to use. Indicators, that kind of stuff. I really don't do a whole lot. I'll draw some stuff on the charts looking for previous price action. But as we've coined here, we are not traders looking with a crystal ball. We are looking to see what a chart tells us. We're reading a chart. So that's what we'll do today. All right. Before we begin, let's go through the quick Nadex risk disclaimer. Oh, the birds are already chiming in. You guys can hear little tweets. Those are birds in the background. They are my trading buddies. They like to stand on the monitors and watch the charts. They're in the cage today, so hopefully they're not too loud, but they do get excited with charts. But trading on Nadex involves risk and may not be appropriate for all investors. Trading can be volatile, and investors risk losing the cost to enter the transaction, including fees. Now, the information presented within this presentation is for informational and education purposes only, and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Now, any trading decisions that you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results. Nadex contracts are based on underlying asset classes, including Forex, stock index futures, and commodity futures. Nadex is a registered trademark of the IG Group. Now, as far as the agenda goes, what we're going to do is we're going to talk about upcoming news events. Obviously, this morning, if you guys have been watching the market, a little craziness, and that is because the Fed Chair Powell testified. And there's a couple other things we will mention today. What we'll do is we'll go through not only today, but big events that are going to happen the rest of this week. We will mention what we'll do is we'll switch it over. We will dive into the indices. Then we'll dive into the Forex charts. Not all of them, just the ones that Nadex covers. And then we'll cover commodities. Obviously, gold, silver, and oil have been absolutely insane the last couple days. So I want to make sure that we cover those and show you guys where the potential bounce points have been and how we can kind of trade that looking into later on the week. So with that said, let's dive right into kind of news, right? So news-wise, I use Forest Factor. There's a number of different websites we can use. Let's get our most updated version here. One thing, scanner at the top, you guys know that I use this each week. This is kind of helping me understand what has really been moving in. I can tell you right now, Looking at the euro dollar moving, the pound dollar moving. Again, we're seeing a bit of a, pound strength, but mostly dollar weakness, more or less across the board, especially versus the euro. That one has just been absolutely just insane this morning, blowing through levels, and we're having to go to a much higher level right now. But a lot of the news that we saw today, again, some bad news in Canada. The GDP, although it was positive, it was less than expected, and they actually, revised it down their previous. So Canada is not getting back to whole as fast as they originally had hoped. Had some good data. The final manufacturing numbers of the pound was good, better than expected. Still showing expansion. The ISM manufacturing data for the U.S. was, while above 50, was less than expected. A little bit of a disappointment. But again, if we talk about, ISM manufacturing versus the, the Fed chair takes that one every day of the week. And some of the statements that he made today are why we're seeing the kind of boom what we're seeing in the markets right now. Later on today at about noon, we have the ECB president speaking. That may provide a bit of a retracement off this euro dollar. We'll see. They're talking about weakness and stimulus and different ways to, kind of progress further into, COVID. You'll see something down here, leadership through the crisis, keynote speaker. So again, you're gonna see that, and there's a couple other things down here as well. Brexit obviously has been out there with the headlines, and we're going to see a lot on that. And again, I'll cover this latest news section here in a second. But tonight, I mention this every single week, and every single week there are amazing setups. Tonight we have the GDP in Australia. It's expected to be 2.5% increase quarter over quarter. If that is a disappointment, we could definitely see some collapsing Aussie dollar. All right. So that's one of those ones that, again, I don't know if you guys are unfamiliar with trading at night. Aussie news releases, things like low speaking or GDP, those are great releases to be able to kind of, get your teeth wet there, right? Take the first bite into that Aussie apple. I would say kiwi, but that's, I guess, more of a New Zealand thing. But again, great trading at night. Going into tomorrow, tomorrow is doesn't look like a lot, but again, Powell is testifying again. We have ADP non-farm employment change, which, looking at this one, we've seen a little bit more of a disappointment. Again, we have the September 30th number look great, but again, quite a large disappointment last month. And again, now with more additional lockdowns, I don't know, we'll have to see. I mean, you can see there's a big drop here. So saying that the economy is great when, again, people are getting hired back, but not quite at the same rate they were, right? It's never a good thing. As well as tomorrow is an oil inventory report. OPEC had meetings earlier this week. So again, a lot of the oil movement around has been talking about cuts and what those cuts will look like. Again, demand being lower. It's funny to hear that the U.S. economy is doing great when we're more, OPEC is talking about how this reduced demand and effects of COVID are going to go at least into the first quarter of next year, if not even further. So, kind of a tale of two news releases, right? Going into Thursday, we have more OPEC meetings. Again, OPEC called emergency meetings last week. It's still going to be a big issue. OPEC is very worried about oil demand going further. What's going to happen? Again, more of those. The unemployment claim on Thursday. Again, it's great to see that there are people, 380,000 people or 400,000 people as they're projecting are going to get new jobs. But at the same time, first-time claims are at 775,000. So great that 400 people got jobs, but 775,000 lost them, and now we're hearing more about additional lockdowns, so not good. And then ISM services, PMI. Services will probably go down a little bit. Again, services, whenever people are, restaurants, things like that are being limited, interactions are being halted, services tends to drop a bit. So I don't know that we'll go below 50, but we will kind of see there what happens with it. And then Friday, it's our big Friday, right? The first Friday of the month is non-farm payroll. We will see the unemployment rate. It's expected to drop just a little bit to 6.8. Non-farm employment change, 500,000 new jobs. And again, 775 lost. We'll see if 500 can come in. Average earnings up slightly. And then again, we have the same information for Canada. So Friday is obviously a very big day to be able to be, trading the markets. And don't forget, it's one of those things. Don't forget that Nadex has event binaries, particularly on non-farm. I don't typically talk about them too much, but if you have an opinion on them or want to see the data on Wednesday and then attempt to forecast what they'll be on Friday, that's entirely up to you guys. So again, make sure that again, you guys are looking over there for that one. All right. let's see. I think that's it really for news. Oh, I wanted to run through the stories, right? The stories. Story-wise. Oh, hold on. Let me make one change here. I ended up moving something around real quick. Let me change one thing to maybe help out the audio just a little bit. Right there. That should be better. I made one change earlier. I forgot that I moved it, and if I talk loud, it automatically adjusts it. But then I got to continue talking loud. It is what the problem is. All right. That should be good. All right, as far as the big news, obviously with the markets moving, Powell is definitely one of the big issues here. Not issues, but again, he made some statements. Making statements about we're going to continue to provide strong support for those that need it. Right now, I wouldn't say, let's see, how do I put this nicely? Couple tweets that he's made is the U.S. economy has performed better than expected, right? And again, depends what your definition of the economy is, because more people are getting laid off than are getting hired. We have a long way to go, a long road for recovery. And then he mentions that parts of the economy might need help bridging from one side to the other. All right. I don't see Amazon. I don't see any of the online retailers. I don't see Walmarts. I don't hear them talking about their bottom line and their profits. So you're seeing big business thrive in this environment, but I will say that you are seeing the small business kind of suffer. So I'm not sure what Powell means by we're gonna, help bridge some people along, because at least I know, for me, in seeing my town and what I've seen here, I've seen many of the small business, the long-term mom and pop shops are basically all closing down, and you're seeing, in-person retail all collapsing. So I'm not sure what he means by support. All I know is when you hear, Powell speak about support, the economy reacts in one way. It goes up. Okay. And again, what does support mean? It means money, right? It means money. It means stimulus. In regards to stimulus, I don't know if you guys saw this or not. Mnuchin is going to speak with Nancy Pelosi about COVID relief today. They're going to talk about the CARES Act and what additional stimulus looks like. So for me, looking at this, I do believe there is a little bit of a disconnect. You have one person saying that the economy is working great, but yet now we're talking about stimulus, and you have Mnuchin, who really hasn't said much to Nancy Pelosi, but now they're talking about COVID relief today, about how we help more people. So kind of a bit interesting, right? What does that mean for me? It means I'd be watching gold this week. I'd be watching oil this week. I'd be watching silver this week. And I'd be watching the indices, because I'll tell you right now, they come to some agreement about sending checks to everybody. It only provides one direction for the overall markets to go, and that's up, right? You start sending more money to people, you're good to go. And then interestingly enough, I don't see it or here right now. Oh, this one right here. I don't know if you guys can see this or not. I was talking about it earlier, about get ready for a supercharged U.S. economy. That that there's a disconnect between the markets and the overall economy, and that people are accumulating excess savings, right? And that the next year is going to be a boom in the market. So I don't know. There's a lot of talk out there, a lot of movement, and again, at the end of the day, it really boils back down to what can we trade? What does the chart say for us? And that's where we find our opportunities. So let's dive over there and look at that. All right. So first things first, let's dive over into, I guess we'll start with NQ. So earlier today, during our presentation, we talked about what we had seen, early in the morning. We had kind of had a little bit of a topping situation, and we expected the open to kind of push lower. And we did. We got a lower. We ended up pushing, let's see, what do we got here? 30, about 40 to 50 points. But one of the things I mentioned this morning is you got to watch Powell, because he has the power and the potential to move the markets in many different directions, particularly with something about support. Again, that's why the markets are driving higher. So big question is, what do we do with this now? We're sitting up here. We're well above what our previous high was. We're at the upper end of the curve. I would say at this point, really the only thing we can do is either wait for a pullback and take this one long, or look for the specific type of pattern we like to be able to put a top in. It's always hard to predict where it's going to turn. I don't want to just put a percentage on here and say, hey, this magical number up here, because we have no proof of where a market's going to turn. Nobody really knows. All we can do is wait until we have some type of a signal inside of a candle. So one thing going forward for this week is you guys can look for some type of a topping sequence in here, some type of a push up, and then again, look for sellers that step into the market. Besides that, we need to have a good level. Now, this was a great level as far as a pullback goes. If you look here, we had a strong rally, a base, and then a pop off. And this is kind of what we dealt with this morning. And again, what happened? We drove right into that level. Powell spoke, and then boom, this thing launched forward. Okay. So Looking for another pullback level is probably going to be what's on the market for me for NQ. Right now, again, be cautious with it. I think we will have a bit of a retracement, but I will tell you right now, if there is a mention of stimulus, watch this thing to punch forward again. And the best way to play this, it's a little bit harder at noon to be able to find the pullback level, but be looking for secret levels like this. If we continue to push higher, we get some type of a basing level and a pullback, that's going to be where we pull the trigger tomorrow morning. So again, maybe worth you guys, if you had not watched it already, log in tomorrow on YouTube and watch that 9 a.m. when we have a little bit more closer to that time kind of analysis that we can use. But this was the trade setup this morning, the pullback, again, collapse at the open, Pal spoke, boom, popped it right to that level, and that's what we can move forward, into tomorrow. S&P had a kind of similar situation. Now, S&P is up here. It's already at the extreme, and we're already starting to see it falter a little bit. We're seeing the wicks kind of pushed back to the downside. This one didn't really have as clean of a pullback. You can see there's a little area here, but not really my favorite of areas. Right now, even on a lower time frame, this one has a little bit more up here. I'd be willing to kind of say, hey, listen, for the rest of the day, this is maybe actually set up for more of a short, right? You're seeing the topping, 15-minute, you're seeing that it punched forward, pulled back, and was unable to drive further again. Again, we're in lunchtime right now. This may actually give us a bit of a retracement later today. Again, extreme with the curve, but again, always be cautious. We're way, way up top. We're pushing into new highs. Again, all you got to do is have Nancy say, hey, listen, I've agreed to, stimulus, and it'll be out in the next week before Christmas. This thing will pop further. So again, it is one of those environments right now that I will say that Nadex is an absolute kind of, ideal situation because again, remember, we can only lose what it costs us to get in, including fees, right? So, kind of my analysis there. As far as the Dow goes, the Dow is another area. Again, we were looking for this one. This one actually had the cleanest area, right? It was an area basing, strong push. 29,986 is a level that we've talked about for, I don't know, probably about a week now, right? And we've seen it touch here. And again, we had another touch today with kind of a push, and it got down and it just barely missed by a graze, that 1 to 3 where we like, right? It ended up punching higher, going to the next level, and what did it do? It rallied, basically collapsed all the way back down to the 29,862. Again, another level where we're looking for targets at this point. Where we are right now with price, I would say, if we're able to break through this level, and this is breaking through at approximately the 29,841. I can see a retrace all the way back down into probably the 29,500 range, all the way back over into here. Looking at this, there's a few little hiccups here, and they're decent, but we've already seen this kind of turn around and very strong sellers stepping back into the market. Obviously, this spike up, we know what brought that on, but right now with this kind of pushing over, if we don't bounce off this level, it looks like there could be an interesting short here later on the week. And again, a couple ways you could play that. Because it is a continuation to the downside, again, for those of you I mentioned earlier, those kind of the strategies or terminology that I only talk about at Nadex, it would be probably, again, it would be kind of this Harry Potter trade setup, right? Kind of a push below, a pullback, a pullback into that level, and then a continued push back to the downside. Something along those lines, right? Would be what I'd be looking for. And again, if it turns and bounces up to here, I'd be looking to take a short, probably back up here. But again, that's most likely going to be a tomorrow morning thing at this point. All right. So we're going to delete this now. We've hit it. And again, for those of you that have been watching week after week, here's 1, here's 2, here's 3. And what happened on magical number 4? It broke. Okay. So remember, these things don't last forever. Typically, number 4 is the breaker. And again, 1, 2, 3, 4. Okay. So we'll remove that, take it off, and again, that's what we're looking for right now. Again, if we don't break through, we bounce. No harm, no foul, no trade, right? No harm, no trade, no trade. Yeah, so we'll see what goes with that one. All right, so let's dive over into currencies at this point. Aussie. So the Aussie dollar had a great setup in the overnight. It's a level that we talked about. We talked about it last week. We've actually mentioned this one a few different times. I'll delete it right now, but you can see we came over in the night. Right now, this is the this gray area right here. This is the level of what we call as the curve, where we're kind of getting our bullish and bearish bias from. You can see it's kind of floating in there. I would say at this point, because on the 4-hour, we are still sitting in the upper reaches of the curve, we're still kind of, at this point, bearish focused. But right now, I think we're going to have a little bit more consolidation. I think we're really going to get stuck between the 74.02 and the 73.33. Remember, the 73.33 is a level that we used over here for sells, right? Sell, sell, sell. And then eventually, when it broke, it became the bottom. It was a buy, 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 buy. So when we come back down again, it's probably worth one more. Again, with the Aussie news tonight, that's probably going to be a pretty interesting level. All right. The Aussie news tonight is at 7:30 p.m. Right. Let me see. Just confirm that real quick. Oops, not that one. Hold on. I had it up and I unfortunately closed the window real quick. Okay, now I can't get to it. There we go. Yeah, 7 p.m. Eastern Standard Time is when that data comes out. So, way to play this one. If we continue to grind lower, we're in in this approximate level. There are many ways you can play a breakout on this one. Again, you could use a knockout. If the floor is over there, you could use a call spread. You could also use a binary for that. Really, any of the products kind of work for that. One thing I will say is if we can get into that level and we could get a knockout somewhere remotely close where we can control the risk, I like the fact that it's only Tuesday and we have something as big as GDP because that could really give us a nice push back to the top side. All right. The other thing I like about this is the Aussie dollar. It's also a proxy for gold. So if they do mention stimulus, that will weaken the dollar, which will also help the Aussie dollar go higher. So there's a couple different factors in here that I really like as far as the Aussie dollar and where we're coming into. All right. And again, that level is coming in here at 73.33. Now, Aussie yen, kind of a similar situation. We were looking for this one to get short, and unfortunately we're unable to get an entry on it. We needed to go just a bit higher up into 77, and it got front run twice. We missed it by 6 pips twice, and again now it just kind of stabilized and moved sideways. So Aussie yen, we're still high in the curve. I would say, right now you can see kind of where we're channeling. It's kind of channeling kind of in this level. I like the Aussie dollar better, but the Aussie yen will also be another great one to be able to trade tonight for that GDP reading. Now, the way that you play it, unfortunately, right now, we're not going to be able to give you a really quality setup on it. Right now, these are where your 30-minute levels are. I'd like to be up here. I'd like to be at the 72.02 before that GDP number. I think the GDP number tonight is going to be disappointing, which would also lead this back to the downside. My fear is that it will just drive around here in this level because of the yen for the rest of the day because of the U.S. stock indices. But I'd really like to get up to here and then again be able to take this short before news tonight. I think that's a decent level. As far as taking either of these two levels long, probably be looking for this 76.40. So I'm going to draw this kind of here and kind of here are kind of the two levels that I'm looking for tonight, okay, for news. And that's coming in approximately around 77 and then 76.40 would be my kind of top and bottom levels for the Aussie GDP news at 7:30. Now, Euro yen, you can see absolutely exploded. We had another level. It got front run here, got front run again and again. This is, kind of basing right below a level like this is never a good sign. Okay, never a good sign for a level to hold. So this level broke and has now established a new level of risk to the top side. So this is kind of where we're at. So actually, let me drop down to the 4-hour, and let me delete some of these so we can clean and see the charts just a little bit better. We don't need that. We don't need this. And we don't need this one right now. Okay. Yeah, I'll move that. Oops, I didn't want to delete that. One sec. I'll delete that and pull that back down to there. Actually, you know what? I don't need that anymore either. Let's just take that off. There we go. And I'm going to go back up and now look to see what is higher. So as you can see, we got a little bit of room to run here. All right. So I'm going to go back and let's talk about where current price is. So current price right now is trapped within these 4 areas, right? We had a level put in. We got front run here in this kind of level, right? And then we had a lower high, and a lower high. Every time that they tried to rally back up, more sellers stepped in. So it'll be interesting to see what we're able to do now. Now, we can see it pulling back. We've gotten a lot of help, not only from the euro, but also from the yen in this situation. We kind of need this one to rally a bit more before we get to a decent, clean level. Now, I will say, this much movement, and when I say this much movement, we're talking about 91 pips in 3 hours. That is what would be classified as a parabolic move, right? Biggest candles up here, biggest single move. And again, was there any huge news in there? Just Powell speaking. Okay, just Powell speaking. So Could these be considered emotional? Absolutely. Could we drop this down and look for a bit of a topping formation? Yep, and it looks like we got it right there. Could there be a short position in here? I'll move this over because, again, we got to readjust the curve. Could there be a retracement back to the downside? And the answer is absolutely yes. Strong emotional move, pushing down 1 to 3 here, 1 to 5. This is definitely a move that could, again, is it guaranteed? No, nothing's guaranteed inside of the markets. But could there be a move pushing lower? Absolutely. And some of the catalysts on that one could be the conversation later on today. It could be just a retracement over time, again, bringing us back down to the start of the move. Remember, Powell can say whatever Powell wants, but at the end of the day, the market actually has to have true movement from it. Again, emotional response forward, topping pattern put in, wait for a push down, a base, and a pullback to that level. And as long as it doesn't break out the top, there would be your short entry lower, and that level comes in at approximately 125.65. Okay. Again, if we can punch higher, again, I am looking at one level higher that I do want to point out. You guys can see it sitting up here. Now, it's quite a large level. It's about 48 pips. It's actually based off a 4-hour candle. And if we go across, you can see the 4-hour candle, is at the extreme. Now, is it the best form candle? No, I don't necessarily love it. But again, it is a level that, again, measuring the right and left, it is a noteworthy level. So another push higher into 126.62. Again, be looking for that rollover. But I think the near-term play on that one would be again, failure to go higher in this situation, short, and then drop it down to these two different levels. Pound yen. So pound yen, here was a level that we mentioned yesterday morning in our 9 a.m. Nadex broadcast. We said, hey, listen, sellers have been in. It's a bit of a gap. It's been tested. A great movement off of it. And you can see here was the play this morning. Here was the UK Open. It dropped approximately 84 pips into the next level of buyers. And again, we've rallied up, and now we've kind of pushed over. So, there was a knockout. That one knockout has now been taken out. This knockout was from this presentation this morning. Question is, what do we do with it now? Okay, so we are at the extreme, and you guys can see here, I'll go up to 4 hours, you can see it. We actually had a level up here at 140.11, okay? The top of it was at 140.46. As you can see, we ended up punching into that level. I'll drop a line across to there. We don't need it now. And since hitting that level, we've actually pulled back a bit, about 22 pips. Now, pound yen is a little bit riskier of a pair. I don't know if you guys saw it when I had Forex Factory up. There's a lot of information about what's going to happen with the UK and the EU. There's been statements about what is called entering the tunnel, whatever that is, the mythical tunnel. The UK-EU trade deal talks have, at long last, entered the mythical tunnel, is what they're saying. Let's see, what are they saying? The hopes on both sides. They're talking about having a deal by the end of the week. Okay, is kind of the statements I've seen on 2 or 3 different news releases. With that said, that gave us this great emotional rally that Brexit will finally come to an end, but there's still time for it to collapse. So again, I've warned, as soon as we get this Brexit deal done, I believe that the pound will kind of skyrocket forward. We need to be very cautious about it. Just talk about a hopeful trade or a deal conclusion has led to this rally of 128 pips. That's an entire day's worth of movement in as little as 5 or 6 hours. So, yeah, it's one of those things. You got to be a bit cautious of this one right now. So let's go up to a higher level. Let's see. Maybe go to a daily. All right. I'm kind of looking for where this could stop next. And I'm thinking it's probably the double yellows. Let me go across and check to see what that looks like. Yeah, a little bit there. I'm not in love with that one. Let's go see. All right, so there's 2 levels up here. So let's see. We got one level here we need to watch out for, and then another one right up top. So let's focus on those. And this looks like a big stretch, and you're right, it is. It's about 300 pips. But the average move for Brexit, the last couple times we've had monumental releases, has been between 250 and 300 pips. What I'm looking for is if Brexit is, say, decided tomorrow or Thursday, okay, there could be an enormous spike up. Okay, and again, is it a fundamental change in the market? Yes, it absolutely is. But at some point, sellers will step into the market. Why? Because they need to capture the profit of that large move, right? If it moves this much, they want to start selling to get out of the market to capture their profit, okay? Finding that level will also lead us in a bit of a retracement. So I'm kind of looking for some type of a return. back to the downside. So I'd say, if Brexit is approved by the end of the week, look for 143.33 as a potential target for that Brexit. And then again, that would be a level that we look for potential rollover on the 4-hour. Okay. Right now, again, it's not here. We've had the emotional response. I'd be looking and a bit more, bearish focused right now. And again, coming off that level, we're seeing a push back down. If this fails to go any higher, then again, my targets would be 139.01 to the downside. Now, pound dollar, it looks almost, it's basically identical. It's the same pattern. Again, you guys had the drop here. We ended up tagging this level at about 7 o'clock this morning. U.S. traders stepped on where buyers had previously stepped in, and that led the rally much, much higher. The emotional response basically came in from Powell here, punching. Again, this was more of a dollar thing than anything else. This one's a little bit different in the fact that we did not get all the way up. We kind of needed this one to get up to 134.72, and that's where my next level is actually sitting. For the rest of the day, I'm looking for dollar weakness again. Supporting the market, printing money, bad dollar, right? Bad for the dollar. So we'll see if we get any headlines from Nancy. I'm pretty sure if it's a good call, we will hear something, and that could be enough to take us and roll over. But possible scenario would be pop up in this area, look for a confirmation. And right now, I really like where the 1 to 3 is placing us. That's a great little profit target down here at 133.56. Euro pound. Euro pound's going to be interesting. So Euro pound, we mentioned this being the intraday curve level, and you can see we came literally right to the top of the intraday and then started to roll back down again. This one, again, not as much movement as the the pound dollar or the euro dollar. I would say the intraday curve level is still probably fine. I see it retracing back down into the middle. This one's going to be interesting. We've had this top level here, right? And again, we punched just higher than it before coming back down again. It's one of those things. Brexit helps both of these nations. So really getting a clean read on this is going to be pretty difficult. We had that one from before. I'd say we've punched through 1, 2, 3 times. I'm going to actually increase the curve level up a little bit on this one. And I'm going to adjust this just slightly. We're going to take it from here and say, if we can get a bit of a pop up, 90.38 would be the kind of the top side. We're going to hold firm and say that 88.84 is still good for the bottom. I will say, let's see, this is only about 100 pips. Unfortunately, with a Brexit agreement, this one had about, I think it was 186 move last time. I don't know that these hourly levels are going to hold, but on the 4-hour, we're a bit far. I would say right now, I'd say probably a bit more bearish, only because, again, this one got turned around very, very fast. We're sitting in the middle of the curve, so we're kind of in no man's land right now. But right now, I'd be looking at 90.38 and 88.84 as kind of tops and bottoms. And again, maybe a little bit of a minor hiccup at 89.24. I think right now I'd play this with the euro dollar, pound dollar, more than anything else. Like I said, them talking, the EU talking about additional stimulus and how they're going to progress forward. It's not really providing any strength whatsoever to the euro. So again, I think it's going to be a battle of who's weaker more than anything else on that one. Now, euro dollar obviously has been taking off as well. Again, talking about stimulating the economy and providing stimulus and bridging. All that is printing money, extremely weak for the dollar. Again, able to punch through new levels. The next level I have, let's go back and look at it, make sure that is a good level. Again, 121.03 is what we're looking at. Let's see. Man, that's far back there. Let's see. Can I see it on this one, or did I build it on? There it is. There it is right there. Let's see. Go forward. All right, so you guys can see where this one came in at. Let me go one more. There we go. Let's see, on a 4-hour. It's a little bit big, but decent level for a rollover. All right, so right now, again, looking for that same kind of parabolic retracement move. As you guys saw, the price level above, it's 121.03. Again, basically around that round number, the 121.00. Not as good as a 120 flat or a 125 flat, but again, 121 flat would be fine. On a lower time frame, you can see this one is also kind of having that same kind of, topping pattern. But again, it looks like it's making an attempt to push higher. Way to play this one, and again, I don't know if this is going to be the actual true top. It doesn't look like it. It's trying, but we got about 25 more minutes now to see if this will punch. But we could do something along these lines. Again, if this is where the true top is, it doesn't look like it wants to be, but if it was, again, this could be the same pattern up top. Make sure that, any targets that you'd be looking for the bottom, I'd want to make sure that I'm out between the 119.94. Actually make it 120 flat is just a little bit safer, right about in there. So wherever you find a top on this one. But if it doesn't, again, be looking for, some type of a short up in this direction. Again, that level is 121.03. Okay, 121. Just call it 121. Okay. Looking at the dollar CAD. So the CAD obviously has some disappointing news this morning. Their GDP was not as high as expected. You can see this one is definitely chopping back inside of a small area. Going up to a 4-hour, as we mentioned before, our kind of tops and bottom of this one are an aggressive short at 130.93, 131.40, or a long at 128.80. Now, we're kind of stuck here. We did push a little bit lower. Again, in the last 16 hours, we've been pushing straight down. It's kind of, this is a fight too. CAD had bad news. Dollar had bad news. And now you're kind of seeing a chop back and forth. And again, on an hourly basis, you can see it's kind of getting very, very consolidated here. So this one's going to take a little bit of patience before we can get in. Just a word of warning as well. Remember, make sure you check your strike differentials. The dollar CAD tends to be a little bit wider. It can have volatile swings. So that's one thing that I know some people have commented in the past that, I'm like, hey, love the euro dollar, pound dollar, love those things. They're great, right? The 2 hours, the dollar CAD is a little bit wider. So you do need to, again, you do need to watch out for that a little bit. All right. Right now, I hold for those two. Dollar Swiss, you can see the dollar Swiss is just coming into a level. So dollar Swiss on the 4-hour, I like this one. Okay. Obviously, supporting the economy, stimulus, none of those things are great for the US dollar. This is absolutely a very emotional move, but it's going into a level on the 4-hour, which was also a very emotional move to the top side. So ways that we can play this one. It has entered the bottom third, which again is typically a signal that we're looking to get long. We are hitting an area 89.98. I actually don't have it up right now. I did earlier and I forgot to leave it up there. This is one of those ones, and again, remove dollar CAD, pretend, or dollar Swiss, pretend that I'm not looking at dollar Swiss. If this is any other chart out there, the first thing that I'm thinking is I need to go check out knockouts. Why? Again, define risk, bottom third. It'll give me the rest of the week to be right. Again, I don't have to worry about, expirations. But when we start getting this bottoming pattern, again, this is a 4-hour. If we drop this down to a 30-minute, you can see that the candles are not as impressive. And while still red, we're starting to see a bit of a slowdown. And again, we haven't even hit the level here on the 30-minute of where the buyers are supposed to step in. So this is a trade that we talked about earlier in the week. And again, it's kind of looking something along these lines, right? I'll draw it just so you guys can get a visual, piece of this one. But it's, this one is all about timing, finding the call spread, finding the knockout, finding something that kind of makes sense in there. And again, if we're wrong, the risk on this one is rather small. It's only about a 14 pip risk zone, okay? But again, we want to make sure that we have duration on this one because this one could slow down very, very fast. One of the possible scenarios is they talk today and they say that they don't feel that there's a need for stimulus because the economy is doing so well and it doesn't justify it. That could be the pop to the top side, right? Because that would be strong for the dollar. So a number of different things, but again, one potential setup here. Dollar yen. So dollar yen is chopping back and forth, as you guys can see. We drew this yesterday morning. At 104.62, 103.79 is kind of our intraday curve levels, kind of seeing where things are going to bounce back and forth. And you can see it spent a bunch of time. It rallied up. Spent a bunch of time trying to breach from the middle into the top section. Had a little bit of a rally, today, right? Let's see. Pop this over. Make that big so it looks impressive. You can see it peaked its head, boom, peaked its head, boom, peaked its head, boom, peaked its head, boom, right back down again. We really haven't moved in the last day on this one. So this one has actually been rather boring. The ATR right now on the hourly is 10 pips. The daily ATR is 51. So it's one of those ones that is starting to run out of steam. But I think top or bottom, either way, I think we're all right. 104.62 is good for me. This one is one of the ones that will move with non-farm. And I have used this in the past, and I do actually like this one with 2 hours. But again, tomorrow morning, the first ADP number could be a nice little trade setup, as well as the unemployment or the regular non-farm number on Friday, if we can get up into that 104.62. Okay, I can delete this now. We've actually retraced down. Let me just clean this up real fast. There we go. All right, so let's get to the craziness now. Gold. All right. So gold, we've been talking about a level. And actually, let's see. I think it was a daily level. Yeah, we had a daily level. And we mentioned, hey, 170, 1777, 1752, we had areas of buyers, right? Pop in, base, kind of retracing back, and a little bit of basing. Well, price was able to get into that level, and we came down, and again, the 1770, right around that level, we actually set up a Harry Potter trade, and we said, listen, it's been taking such a beating. Let's not chase it. Let's look for an actual confirmation break of 1760. If it does, its next target, next area of buyers will most likely be down at 1735. It did kind of what we were talking about. It based in that level and actually gave us the confirmation bounce to the top side. It hit the level, it pulled away, it based, it came back, and then stayed. It did not break, and then boom, took off again. So where we're sitting right now, around this 1814 level, it's a level that we had basing. Is it the best of levels? No, it did spend a bunch of time here. We had a nice pop off of that, and you can see that gave us a little bit of resistance with this pop back and forth here. Question is it tradable now? It's bounced off of it. It's decent looking. I think what we need to do is we need to clear any type of a headline this afternoon from Pelosi and Mnuchin talking about additional stimulus coming. That will actually raise this higher. Now, what we've seen this week news-wise is we have seen Germany report deflation, right, a negative inflation rate. Have we seen anything really else? No, not so much. The only thing we've really seen is lower than expected manufacturing data. We've seen GDPs in Canada be down. I mean, the mention of the stimulus is really what's driven this. Okay, so right now, what I would say is, if we don't get any news today, or you start to see this level of support collapse here, right? If you start to see this level of demand right here, if this starts to collapse, that would be a break of approximately 1800. And again, 1800 is a psychological level. If we see a break of that, I could see a retrace back down into the 1770 zone. If we continue just to grind through, the next clean level would be sitting up here, okay? And that level is approximately 1827. So the way that I look at this right now, I'd be looking for a headline this afternoon. With an absence of a headline and it starts to roll over, be looking for a break of 1800 to take this short back down to the 1777, back into this level where we're looking for that Harry Potter break, or wait for price just to grind a bit higher into the 1827. Hourly wise, that's a decent level. Again, it's kind of the takeoff point. There's a little bit of a grind below it, but if not, if it's able to break through, again, we could be approaching levels back up to 1875. So again, a little bit interesting of a play on this one. So kind of hoping we don't get that headline because I would like to see this drop lower. As I mentioned last week, I had to switch over to my mindset to being a bit more bullish on gold because I just don't think, with the numbers being what they are, I think that stimulus has to come. And again, mention of stimulus is higher. Powell talking today about supporting the economy and bridging is basically printing money, and then again, that's why we're seeing the movement. So, yeah, that's what we got there. Now, silver has given us a couple different entries here. So, silver, we had a level earlier that had been hit 1, 2, and then kind of 3, and ended up driving through it. Again, we're looking at a great kind of confirmation. This was a level that last week we talked about, the 22 down to 2190. It held, right? It held, confirmed its bounce, pulled away, based, pulled back, and launched. Did the same thing at this level. Pulled up, based, pulled back, and launched. Now we're looking for the same type of confirmation to the downside. Now, 24 is a psychological level. You can see the chop, and I'll go down to 30 minutes so you can see it. Do you guys see the chopping in this level? That chopping is a telltale sign that we're punching higher. We got a zone right above at 24, so let's see if it does the same thing. If it doesn't, if it gives us a reversal pattern, one of these, then again, what we're doing is we're looking to take this one short, okay? Oops, that one's not even remotely close. Back down, okay? And again, where would it probably stop? Most likely at the basing level here, and we'll see what it's able to do from that level. So we're looking for a bit more of a confirmation on this one. And again, you guys can see where this level came across. It was a drop, a base, a punch down again. It tried to go up, and sellers just hammered that price down. It was a much better level. This was not as clean. And again, touched. This was, again, the basing in that level. So, right now I would say that Of the two, and it's rare. Normally, I would say I like gold, the gold setup much better. I actually got to jump into the silver pool this time and say, hey, listen, I think silver is a better opportunity. It's got a little bit cleaner of some entries. As far as the curve and big levels though, I would have to say the next super clean big level on a large time frame. I know some of you are more swing traders. That level is actually up here at 2450-ish. Yeah, probably 24. Let's see. Yeah, 2450 is the next time that we have confirmed sellers on the large time frame. These are all small intraday type levels. But again, huge movement, no retrace, looking for a turnaround, look for a confirmation bounce off 24 or 2450 are the next two levels where I believe sellers can step in. Now let me pull up, where is it? Oil. Oil, man, this one has just been crazy. So the level we talked about on Monday, again, 3 different trade opportunities in. This morning we mentioned having 4660 be a decent level. Again, we had seen buyers step in. It had been confirmed here. It was driving a bit lower. Look at this as far as a trap goes. And again, these are traps. Breaking the high, trap, everybody buys because it broke a new level. Bam, it slams you back down again. Kind of the same thing here. This was a low. The second it went through, what did it do? Everybody's like, oh, it broke the low. Okay, we're shorting it. And then boom, it went higher. And we're kind of basing off that level. So we're still sitting in this bottom level. At this point, I don't know. I mean, to me, it looks like it wants to go a bit higher. I mean, it's struggling. It's having a hard time. It's midday. Most of its movement has happened. And again, not the best of days for oil this push down. Remember, we do have oil inventory reports tomorrow. And the forecast is that we will be down 1.7 million barrels. I actually think tomorrow will be a miss. I think more people travel than what they thought. I think the forecast will be a bit off. Again, remember, there is a little bit of a lag in it, so I have a feeling that not only will they be off by a little bit, I feel like it will be a big forecast for next week. So I think there's going to be some interesting plays. I still think 46 is a great level. Strong top, strong retest, strong move to the downside. On the bottom, again, 43.60 is another very strong base, very strong bit of movement off. And at this point, again, I know we're kind of in this bottom part of the curve around here, this 44.60, and again, we're rallying above it right now. But for oil inventory tomorrow, I will probably extend this down and change where my bullish and bearish levels are going to be kind of changing from, okay? It'll be adjusted kind of in that sense, right? Again, today I do think this one will continue to push higher just to retrace what it's lost. But I think for tomorrow morning, I think 46 and 43.60 would be our top and bottom kind of ranges in this one. And again, this level here at 46, 45.60, it could take a bounce off of that, just like it could here on kind of a little bit more of aggressive of an entry. So again, the way to play oil inventory, and actually let me put this right here just to make it a little easier for you guys. Let's do 45.60. Hit OK and place that right there. Okay. Those could be kind of, again, small, more aggressive entries for oil inventory reports tomorrow. 46 and 43.60 would be more conservatives as well. Remember, don't forget, great ways to play the oil inventory report. If we do not have a lot of movement in the European session, those 2-hour oil binaries tend to be really great trades. So check those out. That's it. Like I said, oil has just been literally bouncing back and forth between these two levels. So I like it. I like the fact that it broke again. It touched here a few times. It does look like it wants to be a little bit more bullish for the rest of today. Yeah, it's having some issues, but again, it's stabilizing and looks like it wants to push a bit higher. And again, that's a decent bottom on that one as well. So again, going from low in the curve back into that middle range kind of for no man's land tomorrow. But I would expect some moves in the UK session. Best way to play this again for the oil inventory report is to make sure you log in at 10. 9:30, 10 o'clock, see what the opening looks like, see if it's driving into a zone, and then again, take the reversal for that one inside of the smaller duration binaries. All right, so that's the last one for today. Again, we kind of rushed through things. If you guys have questions, you're more than welcome to email me about it, but make sure you guys mark your calendars for next week. If you guys want to join us, the morning sessions are only about 10, 15 minutes. Todd and I try to cap ourselves at 1 or 2 charts. We'd love to have you over there. Remember, that's not anything you sign up for. It's on the Nadex YouTube page. I should actually probably pull it up one of these days. But it's on the Nadex YouTube page. All you got to do is click the subscribe button. And then if you click notifications, you'll actually get a desktop notification or up to your phone when we go live. And it's from 9 to 9:15 That to give you guys some additional analysis time before the U.S. market open. But next week we'll be back for the detailed session at 12 p.m. Eastern. If you have any questions, again, email me at support@keeptradingsimple.com. Thank you guys so much for joining me today, and I look forward to seeing many of you tomorrow morning. And if not, if you guys can only make the lunchtime ones, I'll see you guys next week. You guys take care and have a wonderful December 1st.